Hi Forex Trader, this is Chris from Elite Currency with another video on the classical series Trading Fibonacci in Forex. This time around our focus is on Fibonacci targets and how unique and awesome they really are. So let's take a look at the charts and talk a bit about these Fibonacci targets. My very first target is the minus 0.272 target, and that is right, this one here, the very first one above the 0.0 level. In this case, I'm looking at an upside potential. So I have the fib, how I draw it, I have it from left to right, and you can see that my targets are in minus. All right, that's why they're above the Fibonacci retracements. I have the tool and the retracements connected together and showing all the levels in one handy tool. So if I'm looking at a downtrend, I would of course look at it the other way around, and I would draw it from top to bottom, and I would have the 0 here at the bottom and the target below it. And you can see how neatly the target is respected. First of all, the minus 272 target, creating volatility, and then price making that dip to the minus 618 and a close in reverse off of that level for upside on this pound dollar daily chart. So these levels are indeed unique and powerful because they are so well respected. Price often goes to those levels and then switches gears and reverses to back into the other direction. Like in this case, we were in a downtrend, price hits a deep retracement, goes to targets, and then continues back up. So obviously it's great to know where these targets are for exiting the trade or even for entering potentially, in fact, for a reversal setup. Now the minus 272 target is the first target, and basically it will typically tend to be respected even if price retraces shallow or medium, anywhere between 23.6 and the 61.8 Fibonacci retracement level. We'll still respect that minus 272 target. It's actually the main target with a deep retracement down to the 78.6 or the 88.6 fib. But the main target is the minus 61.8. That is the main target because irrespective of the fact if the uptrend is strong, if the momentum is very bullish or bearish, price usually does get to that level, especially if the trend is present. In a reversal, price might not get there, but if it does get there, it is a highly likely point where it will stop. All right, so that's something that is very useful for corrections as well. If it does get to the minus 618, it's an awesome level to look for the opposite side. Now, if there is a trend, then the minus 618 target is just one of those targets along the way. Like in this case, you see price stopped at the 38.2 fib right here, but accelerated not only to the minus 61.8, but even further to the minus 1000, making a dip, and then continuing all the way to the minus 1618. So if it's really a strong trend, you will see price accelerate past that target. And that's why, of course, I have other targets like the minus 1000, like the minus 1272, like the minus 1618, minus 2618, and the minus 4236 in really strong trends. But of course, that is more useful for a lower time frame than a daily chart because it will take a while for a move like that to happen. So I also sometimes actually add the minus 2000 and the minus 0.786. In this case, I don't have them, but those are useful too. Now you see positive numbers too. That's in case the bottom gets broken in this uptrend. I know where potential support could be. Of course, I don't want bottom to be broken because that's actually my invalidation level of the fib. That's the invalidation level of my swing high, swing low. I would normally not expect price to go through that level. Sometimes, though, I fib. The market just breaks the level that I expect it to be respected. And what can we do? It happens sometimes. In that case, the 138.2 and the 161.8 are still levels that are well respected, and I still want to know where those are. So I have those at the bottom. All right. So this is how I use the Fibonacci tool. There are traders who use it differently. They would actually turn it around for targets and say, okay, I do it like that, and this is where my targets are. It's perfectly fine too. I really don't mind. If you want to do it that way, fine. I rather just used to working like this and rather use this type of Fibonacci targets. So there are different examples I can give as we go along through the market, and these levels are just anywhere and everywhere on all time frames really. For instance, right here we see a 61.8 respect. Look at that, continuing right down to the minus 618. Kind of a bearish zigzag here, right to the target, after which the uptrend continues. And you can see, indeed, we are in an uptrend, and this was a bearish zigzag. And what do I say with reversals? Minus 618, very important. Look at that, boom, right? We get the return back up at that target. So very useful in this case. Let's take a look at some other examples. Here is the euro dollar. You can see on the very first part of the swing high, swing low, price went up to the 38.2 fib and moved down to the minus 272 target. Kind of paused there for a bit before continuing down to the minus 61.8 target, which was the ultimate bouncing spot for upside. So, this is just really, I can use all these Fibonacci tools anywhere I want to, as long as the trend is apparent or there's some zigzag apparent, like a correction with momentum. And for instance, here, if we put a fib on this swing high, swing low, we can see 1.8 fib retracement right up to the minus 1000 target, then up to the minus 61.8 target. And that's a good example of how sometimes price can accelerate past the minus 61.8 target, and that's why it's good to have all these targets just in case it does push through those levels. This is, of course, not it. We have more Fibonacci videos coming up with why did I work, what is a good fib placement, and a lot of practical examples as well. So we're going to really roll out a great Fibonacci series. So I'm excited about that, and I hope that you'll stay tuned with this Fibonacci series and all the info that we will be providing. If you're interested in a free ebook on Fibonacci, by the way, just send us an email to info@elitecurrency.com, and the ebook is on its way. Thanks again, and wish you happy hunting. Cheers.